Assalamualaikum students, this video is for November 2023 exam paper. It's variant 3, paper 2, question 5 part A, 8 marks question. And as you know that there are 3 marks each for knowledge understanding and evaluation analysis. And 2 marks for evaluation. So we first do the knowledge understanding. So let me read out the question for you. This explain how import tariffs might correct an imbalance in the current account of the balance of payment and consider whether these tariffs are the best way of correcting such an imbalance. So for knowledge understanding marks, we need to look at the terms used in this question and we need to give their the explanation. So there are 3 terms I can identify: import tariff, current account, and imbalance of current account. So we give these definitions or explanations of these 3 terms. Import tariff is an import tax or duty that is meant to raise the cost of imports. So this gives us 1 knowledge understanding mark. For the second mark, we need to give definition of current account on the balance of payment. Current account records the inflows and outflows. I would like you to be a little attentive because many candidates confuse current account with balance of trade. So let me request all of you to be attentive towards when I write this definition of current account. It's not just the export and imports of goods and services that are recorded in current account. Current account has 4 sections and I will briefly touch upon them. Even when I write only a 1 sentence definition, I will like to briefly mention to all the 4 sections of the current account. So current account records the inflows and outflows for exports of goods. Now this is the first section of current account. So I use another ink. This is balance of trade. So it records the inflows and outflows for exports of goods and services. Now services are the export and import of goods are recorded in balance of trade, whereas the import and export of services are recorded in the invisible section of current account. So I repeat, current account records the inflows and outflows for exports of goods, export and import of goods and services, primary income and secondary income. So there are 4 sections of current account. Now what is primary income? Primary income is the first income, is the income which the first person earns. Dividends, rent. I own an overseas property and I receive a rent, that will be my primary income. I have invested in the shares of a company in a foreign country and that company pays me dividends. That will also be a part of primary income. Profit. I have investment in a business, I own a business outside the country and I receive a profit in my country, that is again a primary income. On the other hand, the secondary income is remittances, aids, donations, one which you have not directly earned. A person earning salary in Dubai, sending their salary to his family in Pakistan, the family has not earned it. The primary income earner is one who is sitting in Dubai. So the remittance received by a person living in a town, in a small town in Pakistan, is the secondary income earner. So that income is known as secondary income. We often say secondary income includes income which includes payments which you have received but not have earned. So I have given this definition of current account. It's a little longer definition, but my purpose of this long definition was to tell you the difference between current account and balance of trade. So import export of goods is only one section of current account. So the second knowledge and understanding mark we are getting by giving the definition of current account. For the third mark, we need to define the imbalance of the current account. The imbalance on current account arises when inflows and outflows do not match. A current account has a deficit when outflows now you may write again a longer line: outflows for imports, outflows for incomes sent abroad, outflows for donations sent abroad exceed the inflows for exports, primary income and secondary income. However, I'll avoid writing that, but outflows, total outflows of all four items: export, import of goods, import of services, primary income you are paying to others, and of course the transfers you are making for others. So a current account has a deficit when outflows exceed the inflows. So we have secured all three knowledge and understanding marks. We have given the definition of import tariff, we have given definition of current account, and we have given definition for an imbalance in current account. We now move to the second stage, and the second stage is the analysis. Analysis. Now we will be getting 3 more marks if we do the complete analysis. So in analysis we say we may use a diagram even though the question does not require a diagram. We may make a diagram as well, and the diagram may actually give us additional marks in case our text is not completely covering the aspect. But if you have given a good diagram, we may be able to still get full marks. So even without diagram, you may get full marks. Import tariff raises cost of imports, shifts supply curve for imports to the left, make imports expensive, make locally made goods look cheaper, prompting, encouraging consumers to switch from expensive imports to cheaper locally made goods. This will help reduce a deficit and restore the balance in current account. Always try to use the word used in the question paper. Always try to refer to the words used in the question. The question says imbalance of current account. So I'm ending this paragraph with the word that restoring the balance in current account, so that examiner knows that I am answering the question he has set in the exam paper. So import tariff reduces cost imports, shift supply curve for imports to the left, make them expensive, and make locally made goods look cheaper, prompting consumers to switch from expensive imports to cheaper locally goods. This will help reduce a deficit and restore the balance in current account, because imports have gone down, and because of that the deficit will go down. This can be explained with the help of the diagram. So we may make a diagram as well. On x-axis, we may write only quantity, there could be enough, but to make it more explicit, please do write quantity of imports, because the tax is on the quantity of imports. On y-axis, price should be enough, but we should write the complete word price of imports. Downward sloping demand curve, downward sloping upward rising supply curve. Please always use these dotted lines to show the initial equilibrium and initial quantity. And because of the import tariff, the supply curve shifts from S0 to S1. Show it through an arrow, also through symbols. S0 is the original supply curve, S1 is the new supply curve. The price goes up to P1 and the quantity of imports falls from QE to Q1. So that's how we can get the 3 analysis marks. Even without the diagram, we can get 3 analysis marks. We now move to the last section, last assessment objective, and that is evaluation. So to score 2 evaluation marks, we must also give a conclusion. We'll come to that. The effectiveness of import tariff to reduce imports and a deficit on current account depends on PED for imports. Now, why we are imposing the import tariff? Because there is an imbalance in current account. Imbalance is deficit, and deficit is imports are less, and most important component of current account is the import exports. So imports are more than exports. We want to lower import, and how are we trying to lower import? By imposing a tariff, by making them expensive. But even if we make them expensive, but the PED, price elasticity of demand, for imports is low, imports are necessities, local substitutes of imports are not available, people will still be forced to buy import, and import quantity may not fall significantly even if we impose a tariff. So that would not help restore balance, that will not help reduce a trade deficit on current account. So in case PED is low, for example, imports are necessities or their local substitutes are not available. In case PED is low, the imposition of import tariff may not help restore the balance in current account. In this case, now we are giving a conclusion. In this case, an import quota may be more appropriate or more effective. Now, when there is a low PED and people are going to buy the imports even at a high price, and you want to discourage them from importing, so then import quota would be more appropriate and more effective. So 1 mark for the conclusion. and 1 mark for evaluation or identifying a limitation of the effectiveness of import tariff, and we can place this tick over here or probably towards here as well. But since there are only 8 marks, we'll only put 8 ticks. So 8 ticks are 8 marks. And remember, the grade threshold is so low since March 2023 that are around 23, 24, 25 marks out of 60, that is roughly 40%, 45% marks, you are getting an A grade. And if someone gets 4 out of 8 here in this essay, probably he can get an A grade. So just look at the utility of these lectures that we are trying to tell you. How can you get 8 out of 8? So please do give us your feedback, and in case you want us to make any changes in our presentations, do let me know. I apologize for my poor handwriting, but I want to make these classes as interactive as possible. Thank you very much.